go into this quarter's earnings with everyone pinning their hopes on big tech. You know, we did this fantastic Tech Watch column last week about how if you look at the 5 mega caps, their average earnings growth is projected to be like 34%, because we started the year with the pain with tens of thousands of jobs being cut and cost discipline, and the results are now going to show in those names you see on the screen, many of them, maybe apart from Intel, where they're just profit machines at a time where the S&P 500 as a whole is projecting flat earnings growth. But the thing is, Guy, like, what if we're wrong and tech doesn't do as well on a bottom line perspective as we think they will?
This is the story. Look, if the famous 5 do not deliver next week, all hell is going to break loose, I think. But this is the moment for the market. This is what has supported the market. If these guys aren't delivering, then that is a major piece of the foundation that is under pressure.
Yeah, and there's also a lot of contradictory data and reporting out there, right? So if we take Apple as a case study, from a top-line perspective, Apple's revenue is forecast to drop 1% year on year in the quarter. That would be the 4th straight quarter of sales declines, which Apple hasn't seen for 2 decades. And we had that third-party data saying that sales of the iPhone 15 in China are not looking good relative to the same period a year ago when they released iPhone 14. So even if they do, you know, the traditional Apple thing of just being brilliant at eking out profit, psychologically, we're worried about tech because we learned with Tesla this week, right? No matter how charismatic your leader is or how brilliant your product, there is no sort of blanket immunity to the world around you.
But what I find so interesting when we kind of lump all these companies together is that they are very different stories, right? Like Amazon has the retail component, and I get that, but it's also cloud. It's the same with Microsoft, same with Google. That's not the story for Apple and Intel in the same way. Like, we're going to lump them in, which I appreciate, but there's the idiosyncratic issues here.
Yeah, and you know, go back a quarter, you know, one quarter doesn't make a company's...
So big tech is the big event next week, starting with Google and Microsoft after hours on Tuesday. And you can see right here, right? And of course, Tuesday after hours, meaning Wednesday, will be the gap down or up depending on the results of earnings. And my forecast, obviously, well, not obviously, but I'm expecting decent earnings from Google and Microsoft. So that is Reversal Wednesday. And Reversal Wednesday is typically what that means. It goes against the trend of the stock market. Reverse against the trend. The trend of the stock market has been down. Right now, the target looks to be around 4,200. Right there, as you can see, this is the 20-month moving average, which lines up pretty much with this Fibonacci, which is pretty much at the 4,200. So the target is going to be 4,200 on the XPX, and most likely that is going to happen either Monday or Tuesday. May be an overshoot, and the reason why it may be an overshoot is because the ES, the future 42, is also a target, and that is going to be right here with this blue line on the weekly. So that's 42.11, which coincide with I don't know what on the SPX, but I think that looks to be an overshoot of the 4200. I don't think it will end low of day on the Tuesday because I'm thinking there will be a short squeeze, not a short squeeze, a short covering difference, a short covering. And the reason why there's a short covering is because people are going to be afraid, or the shorts are going to be afraid of the Google and the Microsoft earnings, which these guys are the stronger of the big or the Magnificent Sevens, right? The Magnificent Sevens, if you can look at it. Tesla, I was predicting that maybe the results is going to be bad. And I think this is what spooked the market. This earnings that came here really spooked the market. And now everyone is bearish. If you can look at it, all these guys on their channels were pretty much talking about being in a bullish condition. I mean, all these stocks, this guy was not, but most of them, I mean, like FX Evolution, Joseph, and Brian Shannon, all these guys were pretty much positive. But now they're talking about potential crash. Look out below, crash coming, fires coming, and all. This guy says, don't short the market here. He's a little bit early. Don't short the market on Tuesday is what I'm thinking. Right now, the future is slightly up, but whatever it opens up on Monday, that is a bull trap. It is coming down on Monday. Monday will be a down day because there is no catalyst on Monday. You can see Monday has no catalyst. And last week, right? Let me see. Well, I mean, this is the Fed rate monitor, but I can look at this for last week, right? Last week, you had really bad numbers. I wasn't sure if the numbers were bad. Can't remember. But Jerome Powell says the big bad things. And yes, I was confused because of this movement and the analysis at the time. I really didn't understand the direction. Yeah, I'm not good at interpreting the data right away, but after the fact, when they were analyzing it and I was going it through in my video, yeah, it was pretty bad, right? The bottom line or the summary of the gist of what Jerome Powell was trying to relay is that the job market has been strong, inflation, if the investor do not believe in the Feds, if investors, if the Feds do not continue to be aggressive on inflation, then inflation will not go down to 2%. They have a dual mandate, the mandate being 2% inflation and um, you know, maximum employment, and employment has still been good. Employment data coming out, initial jobless claims was not that high. So the data coming out does not support, the Feds from really loosening their policy, even though the rate monitor, it says 0% chance of a rate hike for November 1st meeting, and November 1st is on a Wednesday as well. So that's a reversal Wednesday. So we may have a decent upturn on, I guess, Wednesday and Thursday, because Meta is coming out, but then there's a potential November 26th, which is a Thursday, Thursday close, so Friday potentially could be down. Economic data. Let's see if there's anything. Jobs opening on a Wednesday. So how does this look? What's the forecast? There's no forecast right now. So the forecast coming in is going to drive some of these results. Fed interest rate decision. That's November 1st. This is not next week, is it? This calendar is way off. This week. Okay. So yeah, next week is this week. So let's say Tuesday. There's nothing on a Monday. Manufacturing shipment Wednesday we'll have building permits, new home sales. Those are gonna be weak. So Jerome Powell is talking again. This guy's talking way so much. But that's aftermarket. Initial jobless claims seems to still be forecasting low numbers. PCE, I don't think this is going to change that much. GDP GDP, look at that. Forecast 4.1. Previous, I think this is a quarterly, right? So GDP is on a Thursday. Consumer job. So this is continuing jobless claims continue to go up, but they're forecasting a lower number. Yeah, they're not forecasting a really high number. So we're not sure if that's gonna, the forecast is a little bit on the weak side. And of course, gross domestic product (GDP) 2 was on the 9th. Is this a monthly thing? Yes, it is a monthly. So growth domestic product (GDP) for the month of October. Okay, so it's the previous month. Oh no, it's this month. Quarter over quarter actually. Q over Q. Oh, so it's a quarter over quarter. 4.1 is the forecast to be up here. So I don't know. Yeah, I don't know if this number does seems to be a positive catalyst. So yeah, so that leans to me being Thursday being positive. So we're talking about, let's say Monday is down, Tuesday is down. So we're talking about Tuesday reversal, Wednesday up, Thursday up. Friday is going to be inflation numbers, PCE and inflation number, and Amazon. So Friday is going to be Amazon and Intel, or Thursday after hours, which is Friday opening. So Friday is going to be down. So Friday is going to be down, and then you got next week or the week after, right, which starts on which is toward the end of October. So we're talking about Monday, Tuesday. Apple is going to be November 2nd, and Nvidia is going to be, when is Nvidia releasing? Oh, they're still way out there. My goodness. November 21. So that I'm looking for positive results. I don't know. It's hard to say. Yeah, but Apple is going to be November 2nd. November 2nd. Oh, it's still way off. Way out. The meeting is going to be, the Fed meeting is going to be the 1st. And then Monday and Tuesday will be next week. So let's take a look at the week after economic data. And this is this week, this is next week. So you got Tuesday, housing index, employment wages. That's going to be important. Employment wages. Consumer sentiment is going to be negative, even though it says 103. I'm assuming this is going to come out negative. ISM maybe starting to go negative. Job openings, Fed rates decision. And then you got challenger job cuts, which still probably be decent. So yeah, the Fed interest rate. So what is Jerome Powell going to change his mindset? We don't know. But what we can pretty much say is we know it's going to go down to this level. Okay, that's a given. Monday or Tuesday, we know it's going to go down to this level. What is it going to be on the SPX? Maybe down to this level. Okay. We know it's going to close down on October. That's a given. So October is going to be a down month. And after October, then we start November. So starting November is when the Feds will start talking about their next policy meeting or their rates decision. The Fed rate, right now pretty much, this is already a given. No one cares about this. What they're going to start caring is about this guy, right? What is the probability of no rate hike? It's still higher. The current probability is still higher and trending higher. But, why is the yield continuing to be higher? Well, I guess the yield is continuing to be higher because 5.25% interest rates with a 0% chance of a cut, right? A 0% chance of a cut. So when are they going to start cutting? When are they going to start cutting? That is the big deal. So June of next year, we start going to 50-50. July, so summer of next year, still no rate cut. Here we got, there is no forecast into the future of a rate cut. That is a problem now. So no longer are people worrying about. Investors have made a decision that this 5.25 to 5.5, the current interest rates, are given. So this number moving around doesn't really matter. It's more or less the next number, which is the rate hike, or the one below that, which is the rate cut. So these are the one that the investors are going to start looking into. Probability of a rate cut or rate hike moving forward looking. So investors are going to look to the future. And right now, with the 10-year at a higher rate, that does indicate that there is going to be continued weakness in the market. Now, this may start to turn around. If we look at the weekly, right, it's going to touch 5 and maybe it's going to reverse sometimes in November or after the meeting. So this meeting coming up with Jerome Powell and his forward-looking statement or his forward-looking sentiment and how the questions are asked and how he replied to those questions is going to matter for, I guess, the next week and a half. Right now, the only thing that's going to trigger a positive sentiment is going to be Wednesday and Thursday. I think that is Wednesday and Thursday. That is I forget if it's the economic data. Yeah, I don't remember. Oh, it's the Q3 earnings. I mean the GDP. Right, it's this GDP right here. And of course, is these guys, Microsoft and Google. Meta is probably going to be decent as well. If Meta is decent, they're going to spark Nvidia. Sympathetic wise, because of they are AI related. And Amazon is going to miss, and Intel is going to miss. So that is going to trigger the reversal on Friday, which will coincide with the PCE and also the inflation number. So we have a small reversal on Reversal Wednesday, these 2 days. Then we're going to continue the downtrend. So what we're looking at is, this is Monday, Tuesday, maybe go down to this level 4,200. And I'm in the composite. So going down to this level 4,200, maybe an overshoot, maybe an undershoot, I'm sorry. Then it's going to come back, undershoot this, then come back. This is going to start going down. So as this 200-day moving average starts to go down, you can see the 50 days going down, the 100, the 50, the 100, 200 starting to go down. Yeah, it's going to start going down. People are going to be really bearish, I'm assuming. MACD will continue to go down. Then you're going to have that reversal on Wednesday, I'm assuming. Yeah, Wednesday, Thursday. The MACD is going to come to this flat line, and then it's going to go down some more for next week. So you got a flat Friday, and then the week after it's going to go down. So the MACD is not going to go oscillating up like this. It's probably going to go like this, stop at parity, then continue to go down. So that is what I'm seeing. I mean, there may be other earnings that I'm missing. Let's see if there's some big tech earnings. You know, at this point, you don't even want to look at the 60-minute MACD, right? All these guys are broken. The daily is almost even broken. No, it's not broken. You can see these guys are gonna start meeting up with these lines, right? Meta, Google, right? So they got one or 2 days to get close to them. And cat, yeah, yeah. So yeah, so that looks to be the case. You know, it's just not going to. I mean, I guess anything is possible, I'm assuming. Let me see. There's Bollinger Band, which is starting to go down. You can see that Bollinger Band is starting to go down again. So it's probably gonna keep going down. So what you see is this Bollinger Band starts to go down, and the next one is gonna meet up with this. Then it may start a little reversal, then it continues to go down. And that would line up with, you know, October being red and potentially a reversal. I don't know what November is going to bring. I mean, no one knows what November is going to bring. We're going to have to look at what Jerome Powell say, and how does that translate to these numbers that come about? How does that work? What does that do to the 10-year bond? What does that do to the VIX, right? How does the VIX react to all of this? Okay. How does the options react to all of this? Right? All of that is going to determine what is going to happen on on November, or at least the start of November. And then in the forward-looking analysis, you just continue to look at the data that's coming in, the results, the forecast, and how things, play out day by day to see what the sentiment and the probability of what's going on. But in the meantime, I don't see where I am going to be wrong with this analysis. The only thing I can be wrong is if Google miss. But how can they miss? How can Google miss? Microsoft. Can Microsoft miss? I don't know. Even if Microsoft miss, I don't. Are they going to treat Microsoft worse than Google? We don't know. But yeah, and the GDP number. I mean, why would the GDP miss? Like the GDP right now is gross domestic. This GDP number 4.1. They normally do not miss this that badly. So this 4.1 is a pretty positive sentiment, lining up with Google and Microsoft. So that's the only 2 days I'm going to be bullish. If I decide not to be bullish, then I'll probably wait it out and then see how they behave on that Wednesday, Thursday, and then, if it behaves badly, then continue shorting the market for the continued downturn.